I just made $371,000 in 4 trading days. But here's what's crazy. I did it using the same exact setups I learned when I first started trading back in 2011. I'm about to break it all down and why after 14 years, these basic setups finally produced my biggest week ever. Because it was never about the setups. It was about the 3 crucial lessons that took me over a decade to learn. I'll go over everything from the trades I took, the reasoning behind them, and the profits at each prop firm. But enough of the chit chat, let's get right into the video. Alright, before I get into the actual trade breakdowns, I want to share with you guys an extremely valuable lesson I learned, which is one of the main reasons why I was able to have a record trading week, and that is less is more. So I'm going to take you guys in my time machine and go back to 2011 when I first started trading. This was one of the first posts that I stumbled upon on Forex Factory by a gentleman named James 16, and he used to teach a lot of traders. Tom Dante was actually one of his many students. And this is a price action strategy where he's going over an engulfing bar. You know, this was one of the first trading setups, quote unquote, that I learned. And as you guys can see, this was posted back in 2005. So when I stumbled upon this, it was already 6 years old. And they had already had a ton of traction and volume through the forums following these price action setups. Not only that, but he also went over Pinocchio bars, but we all know them as pin bars. I know it's a little bit hard to see, but you guys can see that these are hammers or pin bars, whatever you want to call them. He called them Pinocchio bars. And this was, again, 2005. So these were 2 of the first price action setups that I learned. Okay, and what happened? What happened to me? My naive self, I thought I knew better, and then I could find a better system out there. So, fast forward. This is my profile on Forex Factory. You guys can see that this is 2011. And this is what my trading charts look like. I had Heiken Ashi candles, I had moving averages, I believe these were fractal indicators, I had TDI, I had stochastic. I was just trying to add anything onto my charts that would give me an edge. Okay, just take note of the date. This is May 13th. And I promise you guys there's a lesson behind this. Okay, so stick with me. So this is May 13th. Not even 10 days later, guys. Look at my charts now. Completely different. This is not even the same system. 10 days. I couldn't stick with a system. Look what I said. I'm just using stochastics and Bollinger Bands to create a higher probability rate on an already 90% system. I was so naive to the fact that these markets don't move off of these indicators, okay? And what I didn't realize was one of the first posts that I stumbled upon, what this guy was highlighting, yes, he had moving averages and stuff on his charts, but he was highlighting price. And if I just put my focus there, I would have made much more progress in a faster period of time. Okay, and you guys are probably wondering, how come your name was not Jade Cap? You know, a little bit of background about me. I used to paintball, and one of the companies was Dye. This was me a couple years ago. So, just a quick backstory. If you guys are wondering, how come your name is not Jade Cap? I wasn't always Jade Cap. I was Dye Kid. So, let's go over the actual setups that I learned. And this is the power of just sticking with one thing, regardless of if it's working for you or not. Stick with it for long enough to find out if it works for you. Then if you stick with it for 6 to 12 months consistently, then you can make that determination if it's not working for you. If you study something for a couple weeks and you take some trades and it doesn't work out for you, don't just abandon it. Because some of these things that I learned back in 2011, if I just stuck with it, I probably would have had much faster growth and it wouldn't have taken me so long to scale my trading to what it is today. Okay, so let's go over outside bars, and I'm going to blend this a little bit with ICT. These were one of the first price action setups I learned. What is a bullish engulfing candle? Essentially what it is, and let me get my marker out here. Essentially what it is we have a bearish candle. Okay, and the bullish candle just takes the low, but it also takes the high. So those are 2 characteristics that we need. We need to engulf the prior candle. And vice versa for a bearish engulfing candle. we need to engulf the previous bullish candle. You guys can see that we took out the high, but we also took out the low. And what is this indicating to us? It's really just indicating to us that the bulls are in control of this market, okay? Because they took out, the bears tried to send it lower, they took them out, completely reversed on them. This bearish engulfing is telling us the bears are in control. And yes, you can get all technical if you want. Oh, the market's run by an algorithm. Does it really matter if the market is going up or down based on, you know, theories? No. Price action is price action. What's printed on the charts is printed on the charts. Okay, now let's blend this with a little bit of ICT and why some of these price action setups, to me now, are so powerful. And me realizing that was just like light bulb moment. I've had the proper strategy right in front of my face the entire time. That's the ultimate realization, that you don't need more, you need less. You need to simplify, strip things down to something that's understandable for you. Okay, so as far as blending ICT, what does this represent? This really represents what? A market maker buy model. So just real quick, look at this candle. This is that bearish candle on a lower time frame. Okay, so let me just zoom in a little bit here. This is that first candle on a lower time frame. What does candle 2 do? Well, it goes, takes out the low, and then takes out the high and closes, right? What is this? This is all a market maker buy model. So in here, lower time frame, we will have consolidations, okay? We will have consolidations, we'll have accumulation, distribution, all in here. And all you're getting from this lower time frame price action is 2 higher time frame candles. That's it. These 2 higher time frame candles on a lower time frame, this is what it looks like. Market maker buy model, taking out the previous candle's low, going higher. Vice versa, a bearish engulfing is a market maker sell model. So we're taking out candles, sorry, this should be candle 1. Candle 1's high, taking out candle 1's high. What happens? Market maker sell model. Okay, we have all these original consolidations that are then being targeted as we break structure. Okay, this was one of the first price action setups I learned back in 2011, guys. This stuff still works today. This was posted in 2005. Okay, look, it's going to be hard to see, but you guys can see here. This candle right here took out the high and then took out the low. All right, so we took out the high, took out the low. What happened? Market traded lower. All right, enough of the poor screenshots. This was the second setup that I learned. Pin bars. Okay? And what characteristics, makes this a pin bar? Well, the closure comes in the bottom third of the whole candle. So if you were to measure the low and the high, the body of this candle and the close, so I will note the body needs to be in the lower third. You don't want to have a large body like this. You wouldn't want to see a large body like this. Yeah, a pin bar or a hammer, right, is exactly that. It's got a long stem, and then the body of the candle is printing and closing in the lower third for a bearish pin bar, or a bullish pin bar closes in the upper third. So if we divided this candle, right, in thirds, divide this candle in thirds if you want. It's closing in the lower third. This is closing in the upper third. Okay, that makes it a bullish and bearish pin bar. Now, blending this with ICT again, what do these become on a lower time frame? I'm trying to simplify these setups and these candlesticks as much as possible for you guys so that you're not lost when I'm going through the trade breakdowns. What it's doing is taking out buy side liquidity, breaking structure, and then closing. That, to me, is a smart money reversal, which gives us what? A wick. Okay? It's giving us this wick. This lower time frame price action is giving us the wick. Bullish pin bar, what is it doing? Taking out sell side liquidity, creating a wick. But these setups alone aren't enough. And I had to learn that the hard way. There's something even more important. Context. Before I get into it though, If you're looking for a detailed guide showing you every trade setup I use, including examples of entries and stop loss placements, make sure you download my ultimate guide to trading executions. I'll leave a link in the description. Okay, next, the context. How do we define what real context is? And what happened to me was I was just taking any candlestick print that gave me an engulfing candle. So whenever I saw an engulfing candle, I would just take that setup blindly, regardless of whatever context there was. So when I was studying these guys, I saw them drawing out trend lines, I saw them drawing out resistance levels, and I just didn't have the experience to do that. So I oftentimes just saw the candle setup and just basically blindly bought and sold the candlesticks. But I didn't realize like context is so important. Where the candle is forming, where your trade setup is forming in the overall narrative of the market. Okay, so if we study this bearish engulfing candle, you guys can see that we've taken out the high and printed below the low, which makes it a bearish engulfing candle. So why does it make it a high probability setup is because we're taking out an old high before we do it. Compare that with this one. So this bearish engulfing candle occurs where? It occurs near the bottom of a range. And this was the context that I was missing the entire time when I was trying to trade these setups. And I thought it was the strategy failing me, when it really wasn't. It was because I just wasn't understanding the market enough to be able to find high probability setups. We're not just trying to blindly short setups or long setups based on when they appear. It's where they appear. At what time does it appear? Does it make sense for this trade setup to actually pan out? And that's the experience level that you need to have. You need to go in the markets and perform trial and error and really dive into your journal and understand, why didn't this setup pan out? Or why did it pan out? The context behind it is more important than you just blindly taking setups. So in that same vein, look at this candle here. This is a bullish engulfing candle. But where does it occur? It occurs in the middle of the range. So the fact that this is occurring in the middle of the range and the market is trending lower, obviously, it's creating lower highs and lower lows. Obviously, this is not a high probability setup either because it fails. Okay, and yes, you can see if you're an ICT junkie, this fair value gap fails because the context is wrong. The context of this market is going lower. So you're going to see these sell side imbalances be respected. You're going to see pin bars being formed. Okay, those are respected because the market is going lower. This here is a pin bar in a bearish market. Okay, if you see a bullish pin bar in a bearish market, don't trade it. If you see a bullish fair value gap in a bearish market, don't trade it. Okay, pause that for a second and rewatch that. If you see a bearish fair value gap in a bullish market, don't trade it. The context is not right. The narrative is not right. Example number 2, bearish pin bar after we take out an old low. Okay, so when we see a bearish pin bar at the bottom of a range or at the bottom of a trend, those are typically not great setups to take. Because like I just pointed out back here, you want to take those setups as they're trading into a premium level. So it really should be kind of stabbing up higher before you take that setup. Okay, enough of the examples. Let's get right into the trade breakdowns. Okay, setup number 1. This here is a pin bar. Okay, and I treat my hourly candles oftentimes as my higher time frame level. Okay, so now that we've gotten this pin bar, I'm seeing that this fair value gap is likely to fail. So what did I do? I shorted leading up into that next hour. So as you guys can see, we took out the previous hourly high, and where did that candle close? You guys can see the body of the candle closed all the way down towards the low end of that candle. So I'm expecting a run lower down into these levels. So this is a large 4-hour fair value gap. And just based on the fact that we traded down into it and didn't really reject a way higher and created this pin bar, I'm leaning short now. Okay, so let's fast forward. And this is just all the context I need. Yes, I have other reasoning on this lower time frame. Okay, I'm using inverted fair value gaps. I have breakers, but the real context is that hourly candle gave me all the indication that I needed to know that this market was going to turn around and trade lower. Okay, so I'm short right now. I just adjusted my stop to make sure it's the same exact price. And I'm just scrubbing forward real quick. Okay, this is actually a really good example. Let me pause this. This candle here, what is it? This is a pin bar. Okay, because we get a nice long wick, and that candle closes in the bottom half, or bottom third of that candle. Okay? And just keep in mind, guys, that these dollar amounts is across 29 funded accounts. Okay, so I believe I risked about $1,000 to $1,500 per account. Okay, you guys can see that pin bar reaction. All I'm looking for is that next candle to trade lower, because I have the context already. Everything else in here is providing me context. Okay, for you ICT junkies, inverted fair value gap. This traded higher, boom, lower. So as this market is trading lower, the narrative behind this market is very weak. Okay, and I don't require full targets. If it gets this close, I'm already up like 1 to 2.5 R. So you guys will see me collapse the trade. Okay? Collapse the trade at about $3,400. And I don't believe it ever got to my full target. Maybe it did. Okay, trade number 2. Again, I'm looking at an hourly candle, but this is the 15-minute time frame. These are our hourly candles here. This candle here is what? A bullish pin bar. Because it closed in the upper half, the upper third of this candle range. Okay, so this body of this candle closed in the upper third of that range. And the higher time frame, the much, much higher time frame, the daily, was very bullish. Okay, so I'm leaning bullish. And we have this very large 15-minute fair value gap. Also, I'm not going over every single trade, guys. I'm going to give you guys examples of the trades that I take based on a blending of ICT and just regular price action that I learned a very long time ago. Okay, also noting that this candle here is a pin bar. Look at the long wick, look where the body closed. And keep in mind that when these price action setups form, and what I didn't know at the time was that many times they can trade very close to the low or the high and then turn around. So your stop loss needs to be in a logical area. Because if you went long on this pin bar, you need to put your stop in a logical area. Just like if you're trading a fair value gap, you need to put your stop in a logical area. Where I'm putting it was the fact that this was such a large fair value gap. My stop loss is going below the current low because we had already retested the midpoint. And there's a lot more I can talk about in this video, but I'm trying to keep things as simple as possible for you guys, because when I'm trading, the less I need to think about specific things, the better. Because I'm trying to focus on my trade management. I'm trying to focus on, is this, a good area to move my stop? Is it a good area to add into a specific trade? Is it a good area to exit a specific trade? I believe it reached a little bit higher, and then I believe I closed it manually because I didn't have confidence that it was going to reach up to the current high that I was looking at. So again, $1,600 roughly across 20 accounts. And it's trading up into this sell side imbalance. So that was definitely something that I was keeping note of as well. Okay, last and final trade that I'm going to go over. We have a lot going on here. Okay, this market was really just trading in a range, but I had sights on all-time highs. So these bullish pin bars, right? We're just stuck in a trading range. All this is just range-bound trading, okay? But the market for the Dow, extremely, extremely bullish. So I am most likely not trying to take setups like this. Yes, it pans out if you're a short-term trader, but I will typically avoid setups like that because I'm leaning bullish on specific markets. So what we get here, we get a bullish pin bar here. We have a bullish pin bar here. You guys can see that if you guys just traded regular price action, okay, very, very simple price action that is not hard to understand because the candles are right in front of you, having logical stops makes a very large difference. Because even if you were to go long here, this market traded against you a lot. Okay, if your stop loss was here, you're fine though. Right? Even though it took a long time, maybe your timing was a little bit off, but all of this adverse price action doesn't really mean anything because your setup is still valid because your stop loss should be in a logical area. But here, I'll break down what I was looking at. We have this pin bar here. Not only that, but we have a bullish engulfing candle that formed 11 a.m., I believe. And then 12 a.m., the lunch candle, what did it do? Took out the bodies of these candles. So I'm looking at the open, high, low, and close, and I'm also looking at, how these candles are forming. Also, I'm going to note this bullish engulfing candle. So this bullish engulfing candle, note how we took out the low and the high. Okay, these markets are battlegrounds. You have to try and understand who's winning in these markets, the bulls or the bears. So as you guys can see, this trade was, as far as a risk reward standpoint, was really, really good because I entered it as soon as we took out the bodies of those candles. All right, this is pretty much zero drawdown. And I believe I exited at like a 1 to 5. Again, $1,500 across 29 accounts. And just very quickly, you guys can see the totals here. All right, these are live. You guys can see the numbers moving around. All right, so now you have all the information you need, but quite literally, most traders fail not because they don't have enough information. It's because they don't know how to put it all together. So I'm going to walk you through exactly how to implement this into your trading so you can start using this tomorrow. First of all, stick with a simple strategy. Do not do what I did, which was seek more and more information. All right, as I showed you guys, the information that I needed to succeed was right in front of me this entire time. If I stopped wasting so much time diving into all the resources that are available online, trying to add new things to the system, instead, why don't you focus on finding a system that resonates with you and tweaking it and focusing on things that actually matter. Okay, don't do things like this. One week I'm looking at this system, the next week I'm looking at this with different colors. People are asking about chart colors. Screw the chart colors. The chart colors don't change the price, okay? These indicators don't change the price. Look how stupid this is. I'm just using stochastic symbology bands to create a higher probability rate. Okay, these things are not creating high probability rates. The trade that you take right now, regardless of the system that you use, regardless if you're using candlesticks or ICT, has the same probability. Okay? Think about that for a second. The same trade that you take right now, with a different system, has the same probability of it working out. Okay? So you trading a different system does not change the probability of the trade that you're taking. Okay, so next, work on understanding the context of the markets. That's the only thing that matters. So the reason you guys saw me shorting NQ was because there was a context and a narrative behind it. Like the market had already rallied a whole bunch. We filled in a lot of sell sign imbalance and we were approaching the NWOG, and then it kind of topped out and lost momentum. Okay, and we were just really trading back into a discount. So I took advantage of that counter trend trade because I thought the market was overbought. That's all the context I needed. If the trade setup aligns with that context and the narrative is there, then I have a trade, okay? Start building a skill set to manage your trades effectively. So scaling it in and out and adjusting your stops to logical areas to reduce your risk exposure is going to add the most to your bottom line when it comes to trading. Trust me when I say this. If you have a trader that only enters one position and then another trader that is able to scale in 2, 3, 4 times while adjusting his stop loss, who's going to make more money? Okay, find ways to get better at doing that. Find ways to find trades that really make sense and really hit those trades out of the ballpark. And I'm not saying take more risk and be more aggressive with the risk. No, do it in a smart manner. Find ways to add into the trade as it's going in your favor. Okay, so if it goes in your favor, it pulls back a little bit, provides another entry signal, adjust your stop loss down on your, or up on your initial position and add another position instead of you getting nervous and panicking and exiting the trade. When I find a really great setup, oftentimes the best trades that I've ever had was because I was able to add into a position, not because I exited prematurely based on my emotions. Okay? This is all you need to put it together, guys. Stick to a simple strategy. Stick to something that makes sense to you and ride it till the wheels fall off. Work on building context. Try to understand why a market's moving to specific levels and where you should position yourself inside that actual market. And then last but not least, the trade management will make you the most money. Okay, it's not in the strategy. A new strategy will not make you more money. All right. So getting into the actual prop firm payouts, this is just on 29 accounts. I have funded accounts at Top Step as well as Take Profit, but I wasn't really trading them this week. This is really just in 4 days of trading. Okay, so all these were 150K accounts starting the week. Okay, Tradeify is now at 164,000, roughly thereabouts. Funded Futures Family, and you guys can tell that this is funded because it says funded. Okay, this is not an evaluation account. PA Apex is a PA account. Okay, this is not an eval account. $14,000 across all of them, and you guys can cross-check it with my actual dashboard here. Okay, 4 days, $14,000 in profit. Across 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 accounts. All right, and here's Tradeify, their dashboard. You guys can see I still need to hit a little bit more because of the consistency rules. And this one I've been trading for actually 11 days. So this is, you know, roughly 75,000 over the course of 11 days, but 11,000 of these 14,000 came since Sunday. Okay, so that total tally as far as $371,000 this week is accurate based on Tradeify making $11,000 at. And then another point that I want to add as far as putting this all together is get used to the numbers. Get used to this being a numbers game because you're going to see numbers all day long. And I try and just do my best in not looking at them. It's so important to be able to desensitize yourself to numbers because if you're going to panic over a couple dollars, you're going to panic over a couple $100. You're going to panic over the next level. You have to go through levels. And when I first started, I'll share a screenshot of my P&L. I was making a couple $100, and that couple $100 position was making me extremely nervous. Okay, but this comes with experience. It comes with time dealing with large numbers. You start scaling and getting bigger. You start getting more comfortable with your emotions, and you start getting more confident with your system, and just realizing that this is a numbers game. Okay, you don't have to have a massive win rate. I had a 63%, 65% win rate this week to make this much. All right, but my losses were extremely small. When I got stopped out, I was adjusting my stop loss to break even or a half R loss. Okay, I wasn't taking full losses, and I wasn't going back in with massive size on my losses after my losses. So as you guys can see, the difference wasn't the setups. It was understanding key principles about trading that everyone gets wrong. And that's why I put together 7 of the biggest lessons I learned from making over $1 million in the markets. You guys can check that video out right here. As always, thanks for watching, and I'll see you guys in the next video.